Hey guys, welcome to my YouTube channel. Today in this episode, we will be analyzing gofashion company. So this company is coming up with its IPO. The IPO applying period is from 17th of November to 19th of November. The issue size is around 1013 crore. In this 1013 crore, 125 crore is a fresh issue and 888 crores is of offer for sale. Offer for sale in the sense, old shareholders are selling their equity shares. Each lot will be consisting of around 21 shares and the price of each share would be ranging from 655 rupees to 690 rupees. So the upper price band of each share would be 690 rupees. So today in this video, we will understand the business model, how this company has been doing from the past few years, and also from an investor's perspective, we will discuss on whether to apply this IPO or avoid this IPO. So having said that, let's start off with today's analysis. So today in this episode, I'll be doing the analysis in a different style. So I have framed few questions here and I have tried to answer to each of these questions. So we will go through the answers and we will analyze the company. So first question is, what does the company do? So this is a women's bottom wear company with a market share of around 8% in the women's bottom wear segment. The bottom wear ranges from leggings, palazzos, long pants, shorts, denim jeans and many other kind of bottom wears which are wearable by women's. Now coming to its famous brand name is gocolors. So many people might have seen this gocolors stores near the airports and in the malls. So gofashion is very much known by this gocolors brand name. So right now they have around 459 exclusive brand outlets. Exclusive brand outlets in the sense, these outlets are managed by the company itself. They are not like a franchised outlets. These outlets are very much owned and managed by the gofashion company itself. So right now the company has around 459 exclusive brand outlets. And along with this 459, the company also markets its products through various retail stores like Reliance Fashion and Reliance Trends. So right now they have around 1267 large format stores. Now coming to the revenue shares, around 78% of the revenue comes from exclusive brand outlets, that is EBOs. 13.44% comes from LFS, that is large format stores, that is like Reliance Trends, Aditya Birla Fashion and many other kind of retail stores. And remaining around 8% comes from online and its own website. So this is how the company sells its products. Now moving on to the next question. The next question is, how is the market distributed in the women's bottom wear segment? So in the women's bottom wear segment, around 66% of market is with the unorganized players and remaining 34% is with the organized players. gocolors accounts around 8% of the market share, followed by other brands. So gocolors has the largest market share from an organized player perspective. So this is how the market is distributed right now. Now coming to the next question. Next question is, who all are its key competitors? So right now in the women's bottom wear segment, there are 4 major competitors for this company. First is Lux Lyra, second is Prisma, third is Dollarsmith and the fourth is Aurelia. So these 4 companies are the major competitors for this gofashion company. Now next question is, how has the company financially performed in the recent years? Now starting from financial year 2019, in 2020 the revenues have increased, but in the financial year 2021 the revenues have gone down. This is majorly because of lockdowns and COVID situation in our country. But if we ignore this COVID situation, then we can see that from financial year 2019 to financial year 2020, the company's revenues have grown. So this is a positive signal. Now coming to the profit after tax, again profit after tax has also grown from financial year 2019 to financial year 2020. But again we see a dip in profit after tax in the financial year 2021. This is mainly because of COVID. So if we ignore this COVID situation, then we can say that this company was in a growth trajectory from financial year 2019 to 2020. Now coming to the quarter to quarter analysis, again in Q1 quarter, we see that the profit after tax has reduced. This is again because this year, exactly in the month of March, we saw the COVID second wave. So because of this very harsh COVID second wave, there was a dip in profit after tax. So financially speaking, this company was majorly affected due to COVID situation in our country. But if we ignore this COVID situation, then we can see that this company has performed very well in the non-COVID period. So this is a positive signal here. Now the next question which comes here is, of course the company had a bad Q1, but how will its Q2 be? So to answer this, we first need to look into the company's Q1 results. In the Q1, we see that there was a dip in its sales and also we see that the company had a very large amount of expenses. This expenses was mainly because of purchase of stocks in trade. which means the company had spent a lot of amount in the purchase of garments and the end products. So this tells us that in a Q2, this company would be having a lesser expenses, and also Q2 was not a COVID period. So in Q2, we may expect an increase in the sales and also decrease in the expenses. So with this, I think that the Q2 results will be very good. Next question is how much the company spends on marketing, advertisements and on giving the discounts. This company is very conservative company. It spends very less amount on advertising and on marketing. And also there is a little amount of discounts provided in its online retail channel. So only in the online retail channel a 10 to 20% of discount is provided. Whereas in the exclusive outlets and in the Reliance stores, no discount is provided on its products. So this tells us that the company spends very less amount of money on advertising and also on the discounts. Now coming to the geographical presence, the company has a large number of outlets in the southern part when compared to the other parts of India. And in the recent times, you can see that the company is gradually increasing its presence in the western, in the north and in the eastern part of our country. So this tells us that the company still has a very large amount of growth opportunities in our country. Next question is, how did the company tackled the financial year 2021? Now we all know that financial year 2021 was a bad year for many companies, and the apparel business is also one of the hardest hit businesses due to the COVID situation in the country. Now in the COVID year, this company of course had a very less sales, due to which the company incurred the losses. And also we see that the company still had a very high amount of expenditures because the company has to pay a large amount of money for renting the properties. So due to low sales and a high expenditure, the company faced a loss of around 3.5 crores in the financial year 2021. Now if we compare this with the other apparel brands, this loss is very less. The reason why this company had a very less loss when compared to the other companies is this company had kept very low inventories in the financial year 2021. Instead of keeping the money in the form of inventories, this company had kept the cash on its hand. So this actually helped the company to survive the COVID-19 period. So this is actually a positive signal here. Next question is, why are promoters selling their stake? Now we have seen that this company is a strong company with a growing business model, and also its balance sheet is strong, and also it has successfully managed to keep itself alive in the COVID situation. Then why the promoters and private investment firms are selling their stakes? To be frank, I too don't have the answer for this question, but one thing what we need to note here is, always private equity investment firms invests in a company with the view that they make a large amount of money after a certain period of time. Now if we see the Sequoia Capital Indian investment firm, whose average buying price of shares is around 40 rupees. So with this IPO listing, they would be making around 12 times the money which they have put into the company. So this can be a possible reason why the existing shareholders are selling their stake. And also along with this private equity investment, promoters are also selling a little amount of their shares. Now if we see the promoters' average cost of acquisition per equity shares, then promoters have acquired the shares at a price of around 1.67 rupees. So promoters have bought this share at a price of 1.67 rupees, and right now if we assume that the IPO gets subscribed at the upper price band, then promoters would be making around 413 times return on their money which they have invested. So of course this is also a good opportunity for promoters to exit here. But guys, promoters are not the major sellers here. The major sellers are private equity firms, and along with them, promoters are also selling a little bit of stakes. Now, moving on to the next question. Next question is, will there be any kind of a listing gains in this company? So right now, today is the second day of the IPO period. The grey market premium for this IPO is 600 rupees per share, which means 85% of listing gains is possible on this IPO. And also, if we see the subscription status, retail individual investors quota is fully subscribed, non-institutional investor quota is also fully subscribed, and QIB quota is also fully subscribed. So this tells us that this IPO is right now in a high demand. So going with the grey market premiums and the subscription status, we may expect around 50% of listing gains on this IPO. This is what my personal opinion is. What is the PE and valuations of this company? Now, we won't be able to derive the PE of this company because the company made a loss in the financial year 2021. So we will not be able to get the PE. But now let us ignore the financial year 2021 because this year was a COVID hit period and many of the companies faced many problems in this year. And also this company has successfully survived this period. So let us ignore this period and let us consider the financials of 2020. So going with the financial year 2020, the net income in the financial year 2020 was 52.6 crores. Total equity shares after the listing will be 5.3 crores. So EPS will be somewhere around 10 rupees. Now, share price of each share at an upper price band will be 690 rupees. So, 690 divided by 10 will be 69. Now, coming to the book value per share is rupees 50. So, right now, at a price of 690, the company would be 14 times to its book value. The market cap of this company at a price of 690 per each share would be 3700 crore. So, from a valuations perspective, and going with the financial year 2020, this company looks little expensive. But guys, if we compare this with the other listed players like Aditya Birla Fashion and Page Industries, Aditya Birla Fashion is also in a similar category. But whereas the Page Industries is trading at a very expensive price. So comparing to its peers, this company looks reasonable. But without comparing the peers, this company looks little expensive right now. Next question is, what are the negatives in this company? The main negative thing here is this is a capital heavy business because this company is not into the franchising business and all the exclusive stores are owned and managed by the company itself. So the company requires a large amount of money to pay the rent and also to acquire the inventories. So this is a capital heavy business and also most of its stores are located in the posh location areas like airports, malls and busy streets. So due to this kind of a business nature, this company pays a lot of money in the form of rents. And the second main negative thing here is, right now the company has a single warehouse which is located in the state of Tamil Nadu. Now, if any kind of a situation or a calamity happens or if the state itself goes into a lockdown, then there will be a supply chain issues. So this is also a negative thing here. The last question is, what is my opinion? What is my take on this company? So right now, I am bullish on this company from a long-term investment perspective. The business model what the company is working on is a very good business model. And also, the company spends very less amount of money on advertising and marketing. Now we have seen that many companies spend a lot of amount on unnecessary advertising and also they provide unnecessary of discounts which ruins their profitabilities. But whereas in this company, we see that this company spends a very less amount of money on advertising and discounts. So this is actually a positive thing here. And also this company right now is very much focused towards a single segment, that is women's bottom wear brand. So I feel that this company is very less distracted and very much focused towards a particular segment, and this is a strong positive signal here. And also if we see the geographical presence, right now the company is very much concentrated towards the southern part of India. So this company has a lot of opportunities to expand towards the north, west and east. So here I feel that this company has a lot of growth opportunities going forward. And the other thing which I very much liked in this company is, in the financial year 2021, this company has very well tackled the situation by keeping a large amount of cash on its hand rather than keeping it in the form of inventories. So this tells us that the management has a very strong business skills. So this is again a positive signal here. So having said that, right now I am bullish on this IPO, and for people who are just seeking a listing gain opportunities can actually apply for this IPO, and for people with a long-term vision can also apply for this IPO. And also at a price level below 900 rupees, I feel that it is a good opportunity to buy the shares. Guys, this is my personal opinion. Before investing, please consult to your financial advisor. Having said that, I conclude my today's episode. I hope this was an informative video. If you liked this video, then hit the like button, and if you wish to watch such kind of content related to stocks and stock market, then you can subscribe to my channel. Thank you for watching this video.